Deven, good morning. Thank you for joining us. Are you rattled or puzzled after yesterday's fall?
Yeah, good morning, Nikunj. Well, I think the kind of fall which was there yesterday was quite sharp. Though I think some sort of understanding or anticipation was there in the morning yesterday, because rupee was showing a distinct signs of weakness, and probably I think closer to 55 level to a dollar. I think it was suggesting that on technical charts, I think somewhere I think the rupee would probably break below and would go down to 57, 58 level. So that nervousness was clearly seen in the morning hours yesterday, and that was leaving some amount of I think fear at the back of the mind that I think some of the equity algos which are pegged with the dollar currency I think could probably trigger. What we saw yesterday was I think quite I think sharp fall. Of course, I think this kind of falls doesn't sustain over a longer period of time. But my reading says that I think if the rupee continues to remain weak, then in such situation, I think more such kind of unwinding of the position could take place into the marketplace, and that could probably trigger the fall on the downside. However, for the day, I do believe that I think there is a scope for a bounce back to the 6040, 6050 kind of levels on the Nifty, and if it doesn't sustain, then probably I think we could see a further fall. But as of now, I think given the trading character of the market, trading range is set between somewhere around 5700 to 6100. So I would still trade I think in this range given the kind of a trading character and the funds which are trading into the market on the algo basis.
So Deven, should one use yesterday's decline to their advantage and load up? For those who have not participated in last 8, 10, 15 days, they were calling this rally as more like sour grapes. Should they come now?
Well, I would think, Nikunj, that I think individually few stocks are suggesting that I think there should be some amount of attention coming back into them. Maybe those areas where I think structural changes have happened, I think within that the oil and gas space, upstream companies are definitely finding favors. The fall in the market in ONGC and the Reliance kind of stock prices would suggest that I think one could probably re-enter and buy into these companies in a falling market. So certainly ONGC looks more promising given the kind of a structural change which has happened on the subsidy front for the oil and gas upstream companies, particularly the PSU space. So one would like to buy into that space. Similarly, I think one would like to buy into some of the PSU banks, particularly the large size bank like SBU. I think SBI, sorry. I think when it probably starts coming down, I think it is a good opportunity to buy into, I think, SBI kind of a bank. So it would be more selective kind of a pick as I see it into the market. If the market goes under and probably I think gives some amount of fall, one should buy, but I think very selectively.
3 important news flows have filtered in last 5 minutes. Which is the first one you want to react to?
Certainly it would be Tata Motors, Nikunj. I find that the new model launches in case of JLR is driving the volume, and this is something which was even anticipated even in the last quarter. What I believe is that the contribution coming from some of the premium models which the company has been launching could probably significantly be in the top line as well as in the bottom line. So certainly JLR portfolio of Tata Motors is showing a good signs of growth as well as I think the promises. And given the valuation at which Tata Motors currently quoting at, I have relatively higher amount of confidence in the auto space within with Tata Motors, where the stock could possibly perform much better than what I think the earlier past in which I think it has moved up. Would think that I think the stock holds the potential to appreciate by at least 10-15% even in the near term itself, and long term definitely looks more promising. So would I think look at this particular news as a more favorable news in this market conditions.
In general, should investors avoid education stock, because education sector really has been a story of boom and a bust?
Nikunj, I would think that I think one will have to remain selective within this space. One thing is certain that I think within education space I think there are a lot of promises. But what kind of business model that you adopt I think is equally important. Given the kind of 4G and now with the 5G kind of experiment which Samsung has carried out, I think it is very clear that if the education space is basically taken onto the broadband, probably I think the reach would be much better and faster, and that's where I think you will have to look around for the companies which are having back-to-back tie-up with some of the quality programs on the education side. If that happens, then probably I think that business model could probably survive much better. That's what I think. So in that kind of a scenario, one will have to look at really, I think, a company with a similar kind of a strategy. I don't think that, I think, within the space currently, I think we have many such kind of options available. So you are right in a way that I think one can avoid for the time being because the market condition is also not supporting. But if this kind of a model which I talked about, if it emerges, then certainly I think one would like to look at this space more favorably to add into the portfolio.
Deven Choksey, react to the news flow that Tata Steel has decided to take a hit because of chorus of nearly $1.5 billion. $1.5 billion, which means the book value will go down. If the book value goes down, fund managers certainly would like to readjust their price targets for Tata Steel in the near term.
Yeah, Nikunj, I think sounds, a little nervous for sure, I think, given the kind of numbers on which I think we are talking about. But honestly, I think giving the price target on this particular kind of an event or transaction, I would like to do my homework first before I comment on this particular aspect. But certainly, I think the size of the number, I think, is quite huge. One will have to really look into, I think, the impact analysis, I think, in a greater detail.
Okay. Deven, just out of the index, if you were to buy 3 stocks due to yesterday's fall, what would your pick be?
Yes, I think a couple of them would be, I think, the SBI and the Tata Motors, which I have earlier also spoken about. I think both these stocks look very promising to me. SBI particularly more because I think the worst part of the provisioning seems to be over in this particular company. And at the same time, as I see the kind of a fall in the interest rate scenario going forward also, I think, sustaining, I would think that the banks like SBI, which is available at around 1.5 or below 1.5 times price to book value on a forward earning estimates, I would think that this particular bank should be placed in your portfolio, and I think one should carry the long position. Similarly, Tata Motors, as I talked about, I think the JLR portfolio likely to remain robust even in the current year, given the kind of launches that they have. And domestically, they may probably get benefited more because of the commercial vehicle segment may start the up move gradually in the second half of the financial year, once the impact of the rate reduction starts coming into the marketplace, and once some of the projects, particularly the mining project, starts activating, and kind of activity would start in that kind of in that space, would bring up the commercial vehicle demand. So I'm relatively more positive about these 2 stocks, SBI and Tata Motors, within the large cap space or the index space.
The markets corrected yesterday, but look at pharma names. Divi's added 21 rupees. Ajanta Pharma has been on some kind of an tear. Dr. Reddy corrected, but the correction was not all that meaningful. Deven, what do you like from the pharma space? Because the pharma basket is a very large basket. There are companies, it's not a homogeneous basket where you can really buy pharma as a group.
Yes, right, Nikunj. I think, and within the pharma space, I think if you look at the distinct models of different companies, one probably finds one peculiar thing that many of the companies which have had a good run-up in recent past, I think they are largely the companies which are basically having a good generic pipeline. And those generic pipeline of the products, I think, which are going to get dry somewhere in 2014, 15 and 15, 16 thereafter. So not major amount of launches are coming up from many of the Indian generic stories. So that could probably make some of the valuations little bit more expensive if the growth is not following the way in which I think it has followed in the recent past. In such kind of a situation, the model which one would like to pick up would be, I think, the molecular discovery kind of a business model, which one probably would have more confidence going forward. And that's where I could probably place Glenmark better comparatively, because we see the kind of visibility coming up on that side, wherein the molecular discovery part is progressing well. At the same time, the milestone payment is coming into the books, and the generic business, I think, whatever the contribution coming in from that side, I think, is also helping the company. And a special focus on derma segment is certainly, I think, going well. So I would think that, I think, selectively one could possibly add company like Glenmark, which is also likely to get benefited because of the debt reduction formula that they have set up. So to my mind, I think it could be a better choice going forward to have that particular stock in the portfolio.
Deven, what happens to the cyclicals? And we've been talking about how the defensives have been leading the rally right now, but is there an opportunity that my question is that in a dip like this, do you again go and buy the defensives which, have the potential and the earnings visibility to move up and have rewarded investors, or do you take risk?
Well, I think we'll have to follow the mix of both, because honestly, I think the one part is the risk taking and other part is, I think, staying protected as far as, I think, the portfolio is concerned. Some of the pharma names which have got more amount of promises, which we spoke about in Glenmark kind of a company, or for that matter Cipla kind of a company, where the promises are high, I think they should stay in the portfolio and hold the portfolio on the defensive side. Whereas on the other side, I think if one wants to take some amount of risk, and which one should in this kind of an environment, there in such companies within the banking space, particularly where I think you should be riding the growth story. You should be also having consumption story with automobile, I think, wherein I think Tata Motor kind of company could favorably get placed. I'm not totally sure about buying into any of the FMCG companies given the recent run-up and the kind of valuation at which they are quoting. But certainly any fall in the market could bring a lot of advantage to add into the portfolio. Leave aside, I think, some of the large caps. I think maybe you can find many of the mid caps and the small companies which are holding good potential. They are also available at a reasonably discounted valuation, so that could be added into the portfolio. Certainly some amount of risk needs to be taken given the kind of promises that we have in the economy going forward. So I would buy into some of the companies where we have more conviction for the growth in those businesses.
Deven Choksey, at the current juncture, how exactly are you allocating capital in order to maximize returns? What are you buying? What are you selling?
Well, Nikunj, I think the approach remains, I think, as selective as it was before. I think no special focus, but yes, I think there are few areas where we are keenly pursuing and putting the capital into the buying into the portfolios. As I explained, I think few stocks within the banking and the auto space. Likewise, I think within the media space, I think some amount of allocation of fund is going, largely because of capturing the benefit of this distribution reach which is being expanded. So from that perspective, I think we are agreeing to some portfolios, I think, in the media space. But otherwise, I think the approach remains pretty stock specific, and I think the battered down stocks, I think, gives more opportunity where the fundamentals are convincing for the long term. That's the approach we are continuing. There is no change as far as, I think, the allocation aspect is concerned. I think it is gradual, it is not aggressive. Let me put it this way. So I think one will continue to, I think, follow this path till the time we get the certainty in the market or the secular uptrend in the market emerges.
Deven Choksey, appreciate the time and certainly hope to see more of you going forward.